Hi, everybody. Are we streaming? Are we live? I sure hope so. I feel like I'm still getting the hang of this live streaming, but I did come back to the set, which is a lot nicer than my messy desk. I just hope I know how to manage the OBS software and that my MacBook can handle it. Let's take a look at some of the discussion in the aftermath of the Celsius pausing all withdrawals, transfers, swaps, everything. Man, Celsius, you've really dug yourself into I hope not a grave, but it wouldn't surprise me. They haven't really said much more. This is from Celsius's Twitter account at Celsius Network is working around the clock for our community. It's all hands on deck, so there will be no Twitter Spaces this week. That is interesting because they usually do an AMA on Fridays, so I imagine there would have been lots of questions that people would love to ask. They're not going to do that this week. And I believe that is the last thing that they have tweeted. They did notably, where is it? Somebody said earlier today, wow, Celsius Network just allowed me to close my BTC loan, including moving USDC from my earn to my custody account. Thank you, Celsius. It's a miracle, but they actually have some customer service people available to help folks. And from what I was reading on Reddit, not Twitter, on Reddit, but it appears to be consistent with what people are saying on Twitter, they're actually helpful. If for nothing else than the customer service rep being a listening ear and reassuring people that everything is getting worked out, that their funds are safe. That may end up being a lie. I'm not sure. But frankly, in the middle of a fiasco like this, if you just saw your life savings locked up with the risk of never seeing them again, a comforting lie would be better than uncomfortable silence, honestly. In the total vacuum of being able to do anything about it, I would rather have somebody from customer service tell me, you know what, we're working on it and we're going to work it out and it's going to be okay and you're going to get your money back. But what do I know? I am not in this position. Luckily, thankfully, by some miracle, I saw all the FUD pretty consistently over the last several months, and it persuaded me to withdraw all of my funds that I had in Celsius Network, which was not all of my funds, but it was a pretty darn significant portion of my portfolio. It wasn't just Celsius. I had it in a variety of different places. Pardon me while I open my San Pellegrino, tangerine flavored. I just recently decided that centralized exchanges and networks, there's a contradiction of terms. Centralized network. Centralized network, is that a thing? Regardless, I pulled all my funds out, and I'm very, very glad I did. Moving on, there's been a lot of analysis about what actually happened. This from Lucas Newsy, who I don't actually know with so many of these tweets. You know, there are people on Twitter that I follow and that I like and that I actually trust. I know who they are. But there's also just the broader dialogue. And while you cannot take everything at face value, the broader dialogue is very informative. The tone in the room is information. You might call it FUD when it's really negative, or you might call it irrational euphoria when it's really positive. But the tone matters. The tone informs what people do. We like to think of ourselves as rational creatures who use our brain and think critically and are very logical in our decisions. That's not true. We make decisions emotionally. That's always been the case. We come up with stories and narratives after the fact to explain why we did what we did. But we really did what we did because of how we feel. It's honestly pretty liberating and informative to just own up to that. I'm making this decision based on a feeling. You can still make the decision based on your feeling. You can say, I'm going with my gut, but just be honest about it. We all do it. We all make decisions based on how we feel. Lucas Newsy says he's head of R&D at Coinmetrics. So hopefully this is a very informed character. Again, apologies, I'm not familiar with him prior to this, but head of anything at Coinmetrics. He should be relatively informed. Celsius calls itself a network or a lender, but in reality, they operate more like a highly leveraged hedge fund. The business model consists of deploying user deposits across DeFi protocols with the goal of maximizing yield. Here's a thread on what went wrong. And this is generally what Celsius has been accused of irresponsibly deploying capital and not managing risk. They were trying to maximize funds, maximize returns, right? That's what you want to do. You want to maximize returns, but you also need to maintain stability. Everything is a trade-off. And I feel like too often we don't acknowledge that either, that everything is a trade-off. When people are absolutists, when they say there's only one way, there's only one obvious answer, I don't understand how anybody can make a decision any other way. Okay, well, you're not acknowledging the trade-off. There is a trade-off. There always is. From Lucas Newsy, fundamentally, when the ultimate goal of your product is to maximize yield, you need to have a solid risk framework. You need to be able to determine when a risk is not worth the marginal yield, especially when user funds are at stake. Pretty reasonable, right? Except that Celsius does not seem to have such a framework, at least not publicly available. What we've seen instead over the past year is an increased appetite for risk and willingness to deploy millions in highly experimental DeFi protocols. Case in point, last December, they admitted losses related to the $120 million Badger DAO hack. Many at the time were surprised that Celsius was willing to deploy wrapped Bitcoin on a protocol that young. Last month, in the midst of the Terra fiasco, Celsius pulled at least $500 million out of Anchor, Terra's lending protocol. This means Celsius was exposed to UST, and we all know what happened to that asset. So it's clear that Celsius has high risk tolerance, to put it nicely. That approach does well in bull markets, but it's catastrophic in bear markets. At this point, it seems like two positions pose questions about their solvency: wrapped Bitcoin, staked Ether. Okay, I'm going to cut it short there. They're going to look into specific specific scenarios based on what is known about Celsius's funds and which wallets are believed to be theirs and where they're locked up and where they'll be liquidated. He does make a good point here, though, that there need to be different strategies whether you are in a bear or a bull market. What worked really well in a bull market does not work well in a bear market. And I actually watched a video from, what's his name? Becker. Alex Becker, that guy, yeah. The shill of microcap gaming tokens, who just kept telling you every week that you were going to make 100x if you just bought into this microcap gaming token. I don't agree with Alex Becker on a lot of things, but in that way, he kind of is interesting to me because I do agree with him on a handful of things, and I think he's not dumb. I think he's a smart guy that I often disagree with. The most interesting kind of person, to be frank. And his video that he put out yesterday was, shall we say, a departure from his past work. He wasn't talking about microcaps. He wasn't talking about 100x this or that. Frankly, he was just talking about buying boring top 10 Bitcoin, Ether, that kind of thing. And he totally owned up to it. He's like, the things that work in a bull market do not work in a bear market. And you guys need to wrap your head around that. And I'm like, I couldn't agree more. I'm actually kind of surprised to hear you say that. But yeah, totally. Here's another Twitter thread from Namkoiz, breaking down important stories and technical developments in Bitcoin at Bitcoin Magazine. This is a verified account. Is this person pseudonymous? It appears that they are, but they work at Bitcoin Magazine, or they write at Bitcoin Magazine. Here's everything you need to know to understand what's going on. What is Celsius? What went wrong? What can we learn from it? A thread summarizing a report by Dylan Leclair and I published yesterday for Bitcoin Magazine Pro subscribers. The white paper, Celsius's white paper, looks more like a marketing deck / pitch than a technical document outlining engineering decisions. It calls itself a network and refers to community while outlining an executive team. This is on the first page. Now, if you weren't around in the 2017 ICO craze, then you might not be familiar with the atmosphere at the time. Everybody was launching a initial coin offering, and everybody was making a lot of money. I worked at a startup, and I was recruited to that team to help put together their ICO, their initial coin offering, where we minted our own token. It worked very well. We raised about $30 million in Ether, and that all vanished when the market tanked and we had not converted our capital into fiat. And so the company got wiped out. I got let go, and it was fine. It was time for me to go. I'm not upset about that, but it is what it is. However, what I am saying is that Celsius's behavior here, that their white paper looked more like a marketing deck, that's not surprising at all. That was very common at the time. Lots of startups were doing that. The term white paper was being used very loosely. It was being played with. There was white paper, there were yellow papers, there were other kinds of papers. Really what they were is a means of persuading people to buy into your token. You had to include information that was persuasive, but persuasion was the end goal. It was not a technical explanation. That wasn't the idea. It wasn't we want to explain in excruciating technical detail exactly how the tokenomics work and everything else. It was, we want to persuade you that this is a great idea, so you'll buy into our initial coin offering. That was when Celsius came about. That was when they launched their token. I'm not defending this. I'm not saying necessarily this is a great way to operate. It was extremely common at the time, and this is when Celsius came about. So the Celsius token is not abnormal in that sense. It can be argued that networks don't have executive teams, as that puts their goals before those of the community. This is part of what happened as users faced a warning on Sunday that withdrawals from the Celsius network had been frozen. Not your keys, not your coins. And this is linking a tweet from Lex Maskovsky from the night before they locked up coins, where Alex was trying to fight what appeared to be FUD from Mike Dudas, where he said, Mike, do you know even one person who has a problem withdrawing from Celsius? Why spread FUD and misinformation? One day later, they shut off withdrawals. And yes, there were people who were talking about this well beforehand. There were grounded accounts of people who had been looking into technical details and had even had personal experience. Now, when I went to withdraw my funds, which were substantial, I had a really stupid amount of money on there. I say really stupid. I mean, I'm not talking nation state. I'm not talking independent wealth. But for me, it was a lot of money. I went to withdraw mine, and they actually asked for verification in the form of a video. So on this very camera that you're watching me on this set, I turned on my camera and I had to hold up a piece of paper that had my name, it had the date, had the amount of Bitcoin that I wanted to withdraw, and I had to verbally request, please, I would like to withdraw my Bitcoin. And then I had to say the address. I had to read it off. 0xcd, whatever, the 40 character long address. I had to do that twice because I had a couple different accounts that I wanted to withdraw from within Celsius. They really, really made you jump through some hoops. But I jumped through those hoops and I saw a withdrawal. In total, it took me a couple days to get my money out. There were hoops, but it wasn't impossible when I did it 3+ weeks ago. Continuing on the Twitter thread. Interestingly, here's Celsius founder and CEO Maskovsky advocating against Bitcoiners' ethos of not your keys, not your coins. Hat tip, great job by Corey Clipston shedding light on this and many other aspects of Celsius over the past few weeks, months. If you're not familiar with Corey is the founder of Swan Bitcoin, and he has been extremely vocally critical of Celsius and Lex Maskovsky specifically over the past who knows how long. It's been a long time that he's been trying to call these guys out and say that they're, shills for their own coin and they're gambling and it's an altcoin casino. And it appears that he was generally correct in the aftermath of all this. It appears that he had it about right. But in this clip, let's go ahead and play it. I'm going to turn up the volume so you can hear.
The Bitcoin Maxis are all over Twitter trying to convince everybody, hey, this is why we told you, and not your keys, not your Bitcoin, so let me tell everybody, right? 30% of all the Bitcoin is gone because of the Bitcoin Maxis. Because they told you to hold your own keys, and then everybody lost their keys. The Bitcoin.
Okay, so there it is. My thought here is that two things can be right. Two things can be correct. More than one thing can be correct. These are two different perspectives. And of course, in this scenario, the hold your keys rather than hold them on Celsius would have been a better outcome. But frankly, what Maskovsky is saying here is not incorrect. A lot of Bitcoin has been permanently lost because people were trying to hold their own keys and they lost those keys. And once you lose those, they are gone. You are not getting them back. So this is kind of a dual-edged sword, man. It's not obvious that self-custody is always the best option. If we want a world where everybody self-custodies, then we need to fundamentally change some things about our society. Specifically, we need to dramatically educate everybody about how to do that, how to hold their own keys, and then foster a culture where people actually do that. Right now, 99.9% of people are not IT security experts, and even if they are, they might not be implementing great security. And we don't have a legal infrastructure that's willing or able to go after people who violate the law in this regard. If you're advocating that everybody be their own bank, then you are also advocating a world where there's just going to be a lot of robbers. There really are. People are going to be constantly trying to penetrate you if they know everybody has something they can irrevocably steal. Bank robbers exist, but there are probably far fewer of them with a custody situation than if, I don't know, man. Two things can be correct. I don't necessarily think Maskovsky is flat out wrong. He's offering an alternate perspective that in light of current events seems foolish, but he's not incorrect about that. Moving on. The platform, Celsius Network, is made up of three central actors: lenders who deposit cryptocurrency, borrowers who get leverage trading tools, and the Celsius service that orchestrates everything, including managing funds on exchanges and protocols. The Cell token, it's created by converting dollar fees paid by borrowers into Cell, which are distributed by to lenders after a fee cut to create a value-driven lending and borrowing platform. It allows users to join the platform, deposit crypto, and apply for loans. I never did buy the Cell token. I looked at it. They had generous rewards in Cell, but ultimately I was more persuaded that the long-term value of Bitcoin was greater than Cell. Now, that has proven to be incredibly accurate because Bitcoin, even if it's down, is still up dramatically over the last few years, and Cell is down dramatically. It's down really hard. In the past 24 hours, I think it's actually up 100%, but it dropped 90-something, 95 before that. Do we want to keep reading this thread right now, or should I move on to other tweets? Let's move on. There's some general points that I think offer perspective in the current bear market, the ugly bear market. A brief history of Bitcoin crashes. This is something I always try to keep in mind and something I tell people if they're relatively new to the space. 2011, $32 down to 1 cent. Yikes. Now, I was watching Bitcoin in 2011. In fact, I have a chat log with my buddy Rob from July 2011, where I said, have you been able to figure out Bitcoin mining? I really want to get into mining, but I don't know how to do it. And he was like, yeah, man, I haven't been able to figure it out either. Neither of us are programmers or IT guys or anything like that. And so we lamented that we weren't able to do any kind of mining. And I was like, dang, and the price has already shot up. It went up to 32. So I guess I missed the boat. And that's basically what I said in that chat. I said, oh, dang it. I wish I'd gotten it before it shot up. And then in 2012, it shot up again. And in, 2013, he skipped one. There's one in early 2013. There was a spike. There was a rally. There was a mini bull market, a spike and then a drop in early 2013. And I thought, okay, something's happening here. It keeps spiking up and then dropping, but it's not dying. It always levels out much higher than it was before the spike. This has happened several times. Even in 2013, that had already happened multiple times and the pattern was clear. So that's when I actually got involved. That's when we started working on Life on Bitcoin. And then near the end of 2013, this happened. It went up almost to $1,200 and then crashed back down to $380. This was right at the end of our filming and production of Life on Bitcoin. And man, oh man, it was fun. It was cool. I went on a bunch of different news programs. I talked about Bitcoin because we had just lived on Bitcoin for 3 months. And here it was rallying in price in every news station, CNN. And I went on the Kaiser show. I went on Al Jazeera America, which no longer exists. It was fun. It was a cool time. 2017, this was also a fun time. This is when I was working for that crypto startup that I mentioned earlier. Rallied again, went up to almost 20,000 and then down to 11,000. Bottoms at 3,100 in 2018. This was a slow crash right here. You see this? It crashed down to 11,000, but then it continued to decline over months down to 3,100 in 2018. And guys, it feels like we're at the bottom right now, and we might very well be at the bottom because a lot of historical trends have not maintained. We have broken trends in a lot of different ways. So maybe the history will not repeat itself. But as Mark Twain says, history may not repeat itself, but it does rhyme. Maybe we will have a slow decline from here for a number of months. I'm undecided on whether I think we're going further south or further north, but I have put aside a fair amount of cash just to be ready. If it goes further south, and it might, tomorrow morning, the Fed is meeting. They're going to announce the new interest rates. Now, it's expected what those interest rates will be. I believe it's expected that it'll be 7.5. Shoot, I need to pull it up. You could pull it up in another tab. Maybe I have it in one of these Twitter tabs. I don't remember. But even if there's an expectation about what the new interest rates are going to be, that doesn't necessarily mean that it's already factored in completely into the current price, into the market. People always think that the market is very efficient, that we factor this information in. It isn't always factored in. It isn't always efficient. It just isn't. At least that's been my observation. I often feel like I see things way before other people, and it's obvious, and it should be working one way or another, and it isn't. So, whatever. There have been numerous crashes, and guess what happens after each crash? Well, number go up from 32 to 260 to 1160 to 19600 to 13800 to 64800 to 68900. In a year from now, where do you think Bitcoin's going to be? Is it going to be lower? How about 2 years? How about 3 years? How about 4? If you're an investor, if you're somebody who is buying and holding for the long term because you believe this is an actual real technology that has genuine world use, genuine utility out in the world, and you're not a quick flipper, you're not just trying to make a quick buck on a quick flip, you're not trying to get rich quick. If you're actually invested in the technology, then you should be fine. Sit on it. Go live your life. Go do other things. This is an investment that you shouldn't touch for years. Moving on. Lynn Alden, the brilliant Lynn Alden, an analyst who, if you are not already familiar with, you absolutely should be. She points out, good morning, and this is bubble dead, bubble dead, bubble dead, bubble dead. Are we actually dead? Of course not, because the pattern obviously shows that it goes up after each bubble. Similar point being made here. BTC owners, everything you are feeling right now is right here. That little dot, it's this little drop off. Remember the history. Remember what we're looking at in the long run, spanning years. Saifedean Ammous, the author of the Bitcoin Standard, makes a good point as well. Even after this huge crash, Bitcoin still beats all pretenders for long-term savings. If you spent the last 5 years saving $100 a month, here's what you would have today if you put it in Bitcoin: 29,000, S&P 7,700, Dow Jones 7,600, gold 7,000, PIMCO active bond 5,300. Over 5 years, Bitcoin still wins out. It was the best asset investment in the 2010s of the entire anything, everywhere, all at once. Have you seen that movie? It's great. You should go see it. Everything, everywhere, all at once. But Bitcoin beat out everything of the 2010s. So it shouldn't be surprising that over years it continues to work. It has a strong track record at this point. And we're seeing a lot of people coming out saying essentially that they're bullish in the long term. Elon Musk, I'm bullish on Bitcoin and bearish on your outfit. Ooh, sick burn, Elon. Nayib Bukele, you're telling me we should buy more Bitcoin? This is the president of El Salvador, retweeting Bitcoin magazine. Just in, El Salvador finance minister says 40 million decrease in Bitcoin. The $40 million decrease in Bitcoin investment doesn't even represent 0.05% of their national budget. Nayib Bukele is an interesting one. I think he's a model, at least in his outward-facing communication, of what it takes to be a successful and popular politician in the 21st century. He's latched on to a popular meme idea that makes El Salvador look independent from world powers, right? There's the argument to be made that, it's not working and blah, blah, blah. If somebody could make that argument. I am not going to make that argument. What I am saying is that he's good with social media, and he's latched on to this populist idea, because that's kind of what Bitcoin is. It is a populist idea that long term has a really powerful chance of lifting El Salvador out of this kind of obscurity. I like him. At least I like him as a personality on Twitter. I haven't looked into his actual politics. That's another question altogether. Michael Saylor. When MicroStrategy adopted a Bitcoin strategy, it anticipated volatility and structured in its balance sheet so that it could continue to hodl through adversity. So he's not shaking in his boots or anything. He said he was planning on volatility, and previously has already said that it would have to go much, much, much lower for them to be margin called or anything like that. Scott Melker, the Wolf of All Streets, 2025 is going to be epic. Like we said, look on the multi-year time scale. You won't be disappointed if you just sit on what you have and continue to stack. Max Kaiser. Remember how I said 2013 was a fun year because I went on a whole bunch of different shows and news shows? I flew to London. I went on Max Kaiser's show. You can still find it. It's up on YouTube. 2013, Life on Bitcoin, Max Kaiser. Go ahead and search it. I've got mixed feelings about Max. He's really loud, and he's pretty obnoxious, and he's probably a terrible ambassador for Bitcoin, but he's also been one of the most vocal and has volunteered himself to be that person. Feels that way for a lot of Bitcoiners, that they're loud and obnoxious, and maybe we could have a better ambassador, but that's not who's signing up to be the ambassador. It's the zealots. It's the obnoxious ones. This is a perfect example of that. Bitcoin Maxis. Sorry, I told you the effing truth, you stupid bee. Like, do you think you're going to win over converts with that? I actually think this is problematic for the entire space. A lot of Bitcoin Maxis operate this way, where they're antagonistic toward the people that they're trying to convert. I promise you that's not going to work. Former religious missionary here telling you that's not how you convert people, and it never will work. Whatever, moving on. From Mark Mulvey, who I don't previously know. Mark appears to be the director of marketing at Zabedio. I found 2 roads. 1, I found crypto. I never need to work again. 2, I understand Bitcoin. I am getting a new job so I can stack extra hard, and also thinking of maybe having a garden, chicken coop, family, and a second freezer. Your choice, Anon. This struck me as odd. I don't see these necessarily as mutually exclusive. I'm not a purist. I'm not a zealot. I am not a member of the Bitcoin priesthood. I found crypto. I never need to work again. What if you're trading crypto so that you can stack a bigger stack of sats? What if you're managing to find these like super high return things so that you can periodically chip in more sats on your cold storage? Is that playing the casino? Is that bad? And the never work again part, I never need to work again. Is that mutually exclusive from having a garden, chicken coop, family, and second freezer? None of those things sound like a crazy 9-to-5 job. I don't know. This is my struggle with the Bitcoin Maxis. I agree with them on so many things, but the tone and the angle that they take is so antagonistic, and I don't totally get on board for it. From Bitcoin Magazine, billionaire Ricardo Salinas, we will not regret having bought more Bitcoin at this price. Ricardo spoke at the Bitcoin conference in April in Miami. He was great. I really liked the things he had to share there. From Nick Carter, I retweeted this because I liked it so much. Nick is one of those people on Twitter who I do know who he is, and I really respect his opinion and insight. And he's pretty contrarian to people as well, but it's almost always towards somebody who appears to deserve it, right? It's not because they're ignorant, it's because they're pompous. It's because they reject anybody who doesn't have the same credentials that they do. He is often kicking back against somebody who has a PhD, who starts the fight by telling them that he doesn't know anything because they looked at his degrees, right? He has like a master's in something. Who cares what degree he has? Credentialism is not helpful, but there are people who just live or die by it. Anyway, Nick is great. Celsius is a mess, but give me unregulated free market wildcat banking over regulated panopticon, BSA, KYC, AML, choke-pointed bank system hellscape any day. That's a mouthful, isn't it? But I love it. He's right. I am built the same way in that I would much rather have the wild west where I can make my own choices and I face my own risks and rewards than to have basically the walled garden with guards at every post who tell you what you are and are not allowed to do. By mitigating risk and making sure that nobody can take any huge risks, you also necessarily ensure that people cannot have the same kind of rewards. You're limiting their actions. You're limiting the possibilities and options. I felt this way in school as well. The structure of school is built to make sure that generally people don't fail, but it also stops people from being independent and creating and learning on their own in a great many ways, because you give them a lot of rote tasks, memorization, homework, assignments that a brilliant, creative, curious person would never bother with because they're curious in something else. Anyway, I hated school. I really did. From kindergarten through the end of college, I just hated it. And I feel the same way about markets. I will take wild, free, open markets over heavily regulated markets any day. From Lex Maskovsky, just gives himself a bio saying he's a Bitcoin and Web3 infrastructure guy. Celsius has posted another 1501 Bitcoin as collateral and pushed its liquidation price down to 17,211. Now, as I read this right now, the price is 21,607. This is 4:50 p.m. on a Tuesday. Lex posted this yesterday, June 13th. Today is June 14th. Since that has posted, oh no. Did the camera cut out? Can you see me? There we go. It appears we're back. Since that was posted, Dylan Leclair has posted that Celsius posted additional collateral. Celsius has paid $19 million off of their outstanding DAI loan, so they didn't post more collateral, they paid down the loan. The liquidation level for their wrapped Bitcoin secured loan vault is now at $14,000. So they're having to maintain all of this so they don't get wiped out and cause a cascade of failure. From Bitcoin Archive, quoting Gary Gensler, I don't know where this is sourced, but I generally like and trust this Twitter account. Bitcoin and crypto crash has shown the need for regulation. Excuse me. I'll say that again. Gary Gensler, Bitcoin and crypto crash has shown the need for regulation. This is not surprising at all. This is exactly what people said after the Terra Luna crash, that this gave regulators the fodder that they needed. In fact, there was speculation that maybe regulating bodies, maybe somebody involved in the government, maybe the Fed had helped catalyze the failure so that they would have a pretense to go after these organizations. Now, I don't know if I believe that, haven't looked into it. I'm not going to take it off the table because, frankly, I think conspiracies happen all the time. A lot of people dismiss those because they don't like the phrase conspiracy theory. It has a social implication. But guys, I promise, conspiracies happen all the time. Just look at the strict definition. A group of people collaborating to achieve some broad social end. It doesn't have to be nefarious. A conspiracy theory is a marketing campaign or a guerrilla marketing campaign or a political campaign. Anytime you're with a small group of people who are trying to persuade lots of other people to behave a certain way, that's a conspiracy. Anyway. It's coming. Regulation is coming. That's good and bad. It's regulatory clarity, and that will that will allow a lot more people to get involved who couldn't previously be involved. In fact, Mr. Wonderful Kevin O'Leary was on the Bankless podcast, and he talked about, he was asked whether the bill from Senator Lummis was going to get it right by the Bankless guys. They asked that question. He said they don't need to get it right. They just need to have clarity of some kind, because a vast amount of the world's wealth is tied up in pension funds and sovereign wealth funds, and they legally cannot invest. They can't put any of their portfolio into cryptocurrency unless they have that regulatory clarity. This is also something that we would need for an American spot in ETF, a Bitcoin spot ETF in the United States. So any kind of clarity is good, but they could also really screw things up. They could really make it hard and bad. I hope they don't. From Free A Cubed, this is some Twitter anon, but I believe the story. Got margin called. Have 34 hours now. With the price still dropping, the margin call will probably accelerate. When I wake up in the morning for work, I'll probably have lost the majority of my Bitcoin. Never again will I leverage. Time to work on being a whole coiner again. This is what I don't get. You know, this guy's clearly a Bitcoin maximalist. Everything over 21 million. That's a Bitcoin maxi meme, where if Bitcoin is the de facto money of the entire world, then it's everything over 21 million Bitcoin. And he got margin called because he borrowed against his Bitcoin. Never sell your Bitcoins is another Bitcoin maxi meme. You can borrow against it. Your dollars will inflate. Okay, well, Bitcoin's a heck of a lot more volatile than the dollars. So if Bitcoin drops precipitously, which it has in the past couple months, then am I going to get margin called? Am I going to lose my Bitcoin? There are memes here that are appealing, that are sticky, that stick in your brain and are fun and easily repeatable, but they are not always compatible. They're not. I'm an appreciator of nuance. These memes are fun, but don't live by memes necessarily. Coinbase is wrecked. This from another Twitter anon. Friend of mine just tried removing small amount of Bitcoin from Coinbase and was told by the system the transaction would go through in 3 days. Said he could speed it up by verifying his ID. He followed all prompts, and the result, they disabled his account. Red flags. Yeah, man, centralized exchanges. This is how they operate. None of this is new. This is as old as Coinbase is. This is from when Coinbase launched, this has been the case. And you should just expect this from centralized exchanges. They're not going to operate exactly the same way all the time, 100% of the time, as the network at large. You have to rely on administrators to approve what you're doing. They are regulated. They are centralized. So either learn the tools and do the decentralized stuff, or don't be surprised when centralized exchanges don't do what you want them to when you want them to. That's how they operate. You know what? I'm going to skip the Reddit stuff because I'm kind of out of time, but it's been fun. It's been fun. Let me know what you would like to talk about in the future, and we will address that in a coming video. And hope you like the set. Tell me if this all worked. We'll talk to you again soon. Thanks, team.